Thank you, Kevin. Thanks a lot. Good afternoon, everyone. And I'm delighted to be joined by the leading C-suite executives from top-tier companies who have achieved phenomenal growth for their respective businesses through very different but successful strategies. I would like to set the scene for this panel discussion by talking about similarities of my panelists' business models through their achievements on shareholder returns measured through share price over the past 5 years. We have Mr. Gary Chapman on my left, CFO of Navigator Gas, which listed on the New York Stock Exchange in 2003 with a share price of $11 today. That's a 50% improvement from early 2020 price levels of $7.50. Then we have Mr. Nicholas Gleason, who's the CFO of Ednoc Logistics and Services, which does not really have a 5-year comparison because you guys listed in June 2023 on the Abu Dhabi Stock Exchange with 163 times oversubscription at 2 AED, which has returned almost threefold to 5.5 AED today. And then last but not the least, we have Mr. Olaf, who's the CEO of SFL Corporation, listed on New York Stock Exchange in 2004 and paying dividends every quarter since then. They own about 80 vessels and rigs with a market cap of about $1.5 billion US. Share price around $11 today, plus more than $30 paid in dividends over the years. So very warm welcome to all of you. Thank you for being here. And aside from improving shareholder returns, I noticed that all of you also have been extremely busy in fleet expansion over the years, both in the second-hand and the new building market. So before we begin with some questions here, I would like to point out some key differences as well in their business models. Now, Navigator Gas is entirely focused on one sector, gas. Recently also expanding in 2020 into an ethylene export terminal. Then we have Ednoc Logistics and Services, which is extremely diversified across all the major traditional sectors. And as the name suggests, is not just a shipping platform, but a fully integrated logistics business segment. Again, SFL's strategy is very diversified as well, with assets across containers, tankers, bulkers, car carriers, and offshore, with a focus predominantly on long-term charters. So to provide a bit of structure to how we're going to run this, probably I will split this discussion into 3 clear segments. Firstly, what strategies did they adopt to enjoy success that is today? Secondly, what challenges have they identified over the next 12 months? And finally, what are some strategies they are going to use to navigate through these challenges? So let me start possibly with the part 1. And the past 5 years has witnessed many black swan events, COVID, Ukraine conflicts, Red Sea disruption, and Panama Canal droughts. What successful strategies have you employed to steer through these unpredictable events? And since I touched upon gas in my opening speech, I will probably put the first one to Gary.
Thank you very much, everybody. Thank you for listening to me and taking the time today. I think, naturally, all of those black swan events are obviously very hard to predict. I think the best that we can do is prepare as best we can and maybe learn from history as much as we possibly can as well. Maybe humans are not very good at that sometimes and we forget, but I think on the whole, that's a really good thing to try to do. I also think from our side, we have quite a tight customer base, which I think helps us a lot. We can listen to what our customers want. We can try to adapt and be resilient to what they want and what they need. And I think also resilience is really the key. When it comes to, and I think it was mentioned earlier today around having financial resilience on the balance sheet and keeping those options open as much as possible. And I think that's really, really important. The danger is obviously that you go too far and you end up with a very inefficient balance sheet. But where we are today, you probably need to build in a little bit more on the balance sheet than perhaps you might in a different market. I think from us, specifically on Navigator Gas, some of the events that have really impacted us, there was a big freeze in Texas this time last year. Temperatures were down in single-digit Fahrenheit, so maybe -12, something like that, Celsius. It closed a lot of the petrochemical complexes and we shift a lot of ethylene and ethane out of there from our Morgan's Point terminal. But I think for us, one of the things that we look at very much is diversification. And, Navigator, we can ship various different gases. We ship petrochemicals, LPG, ammonia. So we were able to move some of our vessels across into other cargoes. And I think for us, diversification is a key theme that runs through our business. I think the other thing from a Black Swan event perspective, I think that we try to do, and it's very, very difficult sometimes, is to focus a lot on the crew. I think all of these impact the crew more than we sitting in the office can ever know sometimes. And I think we've tried very hard as a company to do everything we can to think about the crew and think about it from their perspective, not what we think they want, but actually go and ask them, how can we help? So I think those are the sorts of things that we try to do to help internally, but also, on the balance sheet side, I think, we're all mostly financiers here in the audience. I think taking a little bit of extra fat and keeping options open as much as you possibly can is really important.
No, thank you. And good you touched upon the human part as well, and on the crew part as well, often forgotten. So probably we will try and definitely come back to it towards the end of this session anyhow. And then Ole, I mean, very different strategy, much more diversified, long-term charters. What do you think about it?
Yes, thank you. Yes, we are diversified. That's for us, that's been an important piece of the strategy. What we've seen over the years, and I've been around the block now, for a while, and seen some cycles. It's so easy when you're at the peak of the market, if you're in one single cycle, to invest at the wrong time. Typically, at the high end of the cycle, that's when capital is available. That's when the equity market's open, and you may end up investing wrongly. So with a more diversified focus, we can watch the different segments, and we've seen that from time to time. Some are scrambling and chasing deals in single segments, where we then pull back and do business elsewhere. And then we can shift back focus. I think the big, I wouldn't call it worrying, but it's the big difference now compared to, at least the last 30 years I've been sort of more active in the business here, is that everybody's making money. It hasn't happened before. Always been someone who's been at the brink of bankruptcy or just, gone over the wrong way. So this is the time when we make the basis for the next restructurings. But hopefully will take some time.
Thank you. And would you classify everything, the conflicts, the geopolitical situation, pandemic, all as black swans, or do you think you single out a couple of them?
With the segments, you mean?
Yeah, would you say everything is black swan, or something can be a little bit more predictable, or you can have an environment? I'm referring to the conversation we've had.
Well, if you look at our portfolio, we have a bunch of container ships, we have car carriers, we have tankers, bulkers, but we have no LNG carriers. Why is that? I mean, would be an obvious, wouldn't it? But for us, it's been a market. There have been too many, I would say, sort of infra fund type capital, and I would say capital that's been chasing it, where the returns haven't really met the levels we want. I mean, when you have a lot of players chasing deals, you typically end up having to accept lower return or take higher risk, or even a combination of the two. So then we happily invest elsewhere, and at the right opportunity, we will definitely be in the LNG market as well.
Great, thank you. And then coming to Nicholas. I mean, ADLOC has been very active in the vessel acquisition space over the past few years. We've been watching it quite intently, and we know about the Navigate trade that you did. So did these black swan events actually kind of drove your thought process that, look, I need to lock it in now, go long on freight, I need the assets? Or was it more like, it was going to happen anyway without these events?
Yeah, so Abhishek, you said to me on the way in that, we shouldn't look at black swan events all as being black swan events, because the one thing that we've known over the last 20 years is they're constantly happening. There's something all the time coming in. And it reminded me of something my golf coach said to me a few weeks ago, which is when you're having a great game, it'll feel completely boring. And I think actually that's the job of the finance department, is we play a really boring game so the strikers and the deal makers can get things done. So how we've been protecting our balance sheet, we were slightly above 0 net debt to EBITDA after running a year of negative. And then the first financing deal that we did after that was a hybrid capital instrument, which is an equity financing, which again keeps our net debt to EBITDA really, really low. And that allows us to lean forward and take risk in certain areas. We've invested heavily in LNG carriers, but at the same time, we've locked in 340 years of contracted activity. So we've got 14 LNG carriers, 1 delivered, 13 coming. And of those, we've got 8 on 20-year contracts, 4 on 15-year contracts, 1 on a 7-year contract, and they're delivering really strong returns. So it's about finding the right timing, finding the right structures, doing the boring things financially, which give you the room to take risk and to take opportunities that typically come up when you have your so-called black swan events.
And did the Navigate acquisition happen strategically in line with this, or was it an opportunistic event for you?
It was a long time in the cooking. So it was a very long discussion about what type of acquisition we want to make to internationalize. So we were running a large and growing deep sea fleet from a single office in Abu Dhabi, and we knew that we needed to be global. We wanted to partner with good operators who had access to ship management. We were very interested in commercial pooling. We think that's the way forward, not only in terms of managing downside risk in a down market, but also in terms of analytics and the information that comes available to you when you're dealing with a large commercial pool. And then when we started engaging with the Navigate team, we were extremely impressed with the people that we met. And in fact, we saw opportunities far beyond what we'd envisaged through the acquisition. So it wasn't opportunistic at all. You know, it was something that we were trying to do structurally to acquire a platform that would help us with our next phase of growth. And what's coming next, we're very far from finished in terms of the growth that we plan to achieve. And Navigate turned out to be a very good fit as a partner for that.
So, while keeping at you, we joined a session earlier today that focused on shifting geopolitics and their impact on global trade. What are the implications likely for the sector, you think? And I'm going on to the second part now, the challenges that you see. What keeps you worried for the next 12 months?
Yeah, I mean, so for us, we certainly see volatility, but we always see volatility. Change is good for the market. There are quite a few things happening at the moment. We'll probably see some agitation, which results in assets leaving the market, which is always good in the long term for rebalancing portfolio. I think we'll see continued shifts in trade routes being plied, but we think that the cessation of hostilities doesn't immediately result in a return to normalcy. So it will take quite some time for people to get used to and accept a higher degree of safety, for example, in transiting the Red Sea. Equally, whenever we see geopolitical events, there tends to be a positive impact on the shipping industry because it impacts your ability to optimize transportation. So in general, we think that some of the volatility that we're seeing will be positive for the market, although we're very concerned to ensure that we're able to safely transit, that crew are safe, that cargoes and vessels are safe as well. So you need to have your eyes open in the industry. It's an industry which is subject to a degree of risk and requires careful management.
Thank you. And Gary, what do you think about, or did you worry about the inflated asset prices, if you think they're inflated? And what about the strong order book in some sectors?
Yeah, well, we recently placed orders for 4 ships, and we debated long and hard about obviously this, as most of the industry has. I think we don't see a big order book in our particular sector. It's actually quite low. I think it's dominated by certain vessel types, and that's not where we operate, principally in the handy size segment and some in the mid-size, as we've just ordered. Asset prices are high. I think we came to the conclusion that we don't see a big drop off a cliff anytime soon. I think obviously there might be some softening because once these orders start coming and the yard starts getting capacity, that's one thing. But you still can't get a ship for many years. So, even if you can take that slightly lower price later this year, you're still waiting 2-3 years before you get that ship. So I think we took the view that we need fleet renewal. We want to grow our fleet. The economics worked. We think we're in a good place. We have a good size in our market for what we do, particularly on ammonia and the petchem side of things. And so, yeah, for us, we think it might soften a little bit, but we don't see a sort of cliff coming. And I think some of the global macro points that we heard this morning, I think probably support some of that. Maybe there's a lot of uncertainty around. There's inflation still in the global economy. And I think managing all of that, we don't see a huge drop back in asset prices anytime in the near future. But, to be fair, who knows? But that's how we see it.
The fundamentals support it, and you don't see a big drop coming in. And if I go to LA, I mean, you would see what is coming in. Otherwise, you won't buy. So there's a very different model. So you look at the asset on your returns basis, and obviously you have a very good semblance of what sectors you have a view on. You go in, but traditionally in your business model, on day zero you go long. So you basically base a lot of decision on the credit you take, outlook you have in the sector, but also you are fully contracted. So do you mind or do you think that the asset prices are really inflated given the current interest environment, and also in terms of the new building index where it is today? Would you do a trade any which way, even if it is much higher than the historic base?
Yeah, I think if you start with the first parts first, we SFL wasn't called SFL all along. We started with a very different business model. We started with we were called Ship Finance International. The first years we did bareboat deals, realizing that that's not really a model that works in reality. It looks great in an Excel spreadsheet, but in real life doesn't work. So we've changed the model. So now we're more of an infrastructure company, really. So we provide, the sea part of the transportation for the likes of, we have many vessels to Maersk, Hapag-Lloyd, Volkswagen, and other, industrial customers, which brings sort of a different set of services that you need to add on to make sure that they really want to continue with your business. But then to the markets, when you do typically long-term charter deal, which is what we do, we focus on typically 5 to 10 year charters is sort of our sweet spot. That's when we can do long-term deals, strong enough counterparties. We can amortize down those assets to what we think are reasonable levels, and we can get the financing sort of tweak on it to enable better cost of capital along the way. So, and there's always been noise. Right now, I wouldn't call it black swan. Maybe an orange swan with yellow hair is probably what we see right now in front of us. A lot of uncertainty, but there's always been uncertainty out there. I would say COVID, that was a true black swan. Nobody would anticipate it before, nor have any view on what the effects of it could be. But there's always been volatility out there. So you have to plan with a longer term view, switching from bareboat model where you in reality fund typically sort of 90+% to people who cannot really access capital otherwise properly. Very different risk profiles. So we're very happy now. As you mentioned, the new building market is, it has shrunk a lot. Will take a long time now to really build the market segments to death. So I think we're in a quite good spot. But I'm sure usually the owners are doing it to themselves, and I think that's going to repeat itself.
I think one of the things that we've seen, I'm looking at this from the outside, from the LNG and the container side, but certainly on the LNG side, I think a lot of the new builds are coming into the market and they have long-term contracts. So they're not actually coming into the market as such. So they're not necessarily adding more tonnage. And when you look at the amount of LNG production that's coming, if that's matched with that tonnage, then you're kind of back to where you are today. So that's just me looking on the outside looking in. I'm less close to the LNG world than some of the people in this room. But, certainly we have a lot of VLGCs coming into the market, and people say to us all the time, are they going to eat your breakfast in the handy-size market? But we don't see that so much because quite a lot of them are tied to particular projects and particular new supply deals. So it's not as simple as saying because there's a whole load of new builds coming into the market that it's going to, destroy rates.
I'll just probably go a little off tangent here. Since we're talking about it and it looks very promising, let me ask you, what are your views on VLACs in terms of, gas VLAC? Is it the future with the order book, the way it has gone? Is there a FOMO if nobody has it, that we don't have it? Or do you think it's ahead of its time and it'll eventually carry ammonia if it has to, but it'll be mainly a gas carrier? Any views welcome here?
So I think like any market, it will take some time to develop. So we've ordered 4 very large ammonia carriers. We anticipate that on delivery, they'll probably trade in the early stage transporting LPG, right? And it'll take a period of time for the market to develop. But we also speak to our trading organization very closely, and what we're seeing through the traders is that the trading market is developing very, very quickly, and that's a great precursor to anticipating the physical market to develop as well. So we're optimistic on the development of the large-scale ammonia transportation market, but it will take some time for sure.
Would you buy them at a premium if you get a contract as a VLAC and not as a gas carrier in your financial models?
I mean, gas carriers for us?
VLACs for you. VLACs with the slight premium they carry. Would you take them as a deserving premium in your models, or would you just model them as another gas carriers and try and see the returns?
Yeah. We typically look at all project on a project by project basis, and we are sort of segment agnostics with what we do. But what we have done, quite heavily over the last few years now, investing in vessels with call it new technology. So what we've been doing, we've been in both building LNG dual fuel type vessels. We've been significantly modifying existing vessels and increasing efficiencies, etc. So we're really pretty open-minded. When you work with industrial companies and when you provide a piece of their logistics chain, it's a win-win when you do new technology and improve efficiency and reduce emissions as a very positive side effect of that.
Thank you. So I think finally we should move to the last part, which I'm sure the audience is keen on listening with respect to the opportunities and the strategies that you think you can make money on, profits on going forward. So Ole, any thoughts? Would you still order new builds today despite the high new building prices, or any other strategy which you have, which you seem the most opportunistic about?
For me?
Yeah.
You mean which segments we are more?
Which segments, new buildings, you think is an opportunity for you? I segued through the VLAC, and I would like to build on that.
Yeah. Now, if you look at the generally shipping, I think the order book now is around 15%, which is relatively low historically. It's come up, but it's not very high. And you have some sub-segments where there are very big order books. But if you look at LNG, that's primarily against long-term charters. Same thing with large container ships, primarily long-term charters. So we wouldn't mind, with the right return, to investing any of those segments, even despite the relative order book. And then you have other sub-segments like the dry bulk market, where the order book now is historically low, I would say, for large bulkers. Quite interesting, but again, it's a segment where you don't really see that many long-term charter opportunities. So we have some assets in that segment, but typically that's been more of a spot-oriented business. And then we do tankers. So we look at all these segments. I think you've had a somewhat of a price correction, but it's really from a little inflated level. So I think if you compare new or resale values to what it actually costs to build a ship, it's a pretty okay level, I would say, from where we are now. So we wouldn't mind investing now, but it's different to invest when you're a little higher in the cycle compared to when you're at the bottom of the cycle, naturally, right? So you have to be much more careful with your counterparty, and you have to be careful with the residual risk you take on.
Very clear. Thank you very much. Coming to Nicholas, energy security is high on the agenda for most of the countries. Do you think there is a business strategy that can be built around this?
Well, I think it's about preparedness, and I think once the spectre of energy security reemerges, it's been there before, and it's probably heightened significantly at the moment. It takes a long time for it to diminish. So I think being prepared for changing logistics, understanding what the logistics are likely to be in the short to mid-term, and making sure that you have the right asset classes to address those. I think as Ola alluded to, a number of asset classes are a relative high in terms of asset value at the moment. So investing requires long-term contracts to feel confident about generating the right returns over a period of time. There are certain asset classes that, as a result of the market situation, might become less expensive for a period of time and more interesting to acquire. As a general rule, of course, we generally think no one should buy anything unless it's us.
Okay. Gary, anything to add, especially with respect to the recent US sanctions?
Yeah, I think what we've found, sanctions have been creeping across the world for many, many years now, and certainly our experience of them, I guess it's the same as many people here. Governance for us is really important. We're listed in the US. Obviously, we are trying to do the right thing at all times. I think it has impacted our sale and purchase process quite a lot. It means that we have to be very, very careful, not only knowing who we're selling to, but also trying to work out what those people are then going to do with that asset, which makes the KYC and our lawyers and our internal teams very nervous sometimes. But we work around that, and I think we can still be successful in doing it. It just makes things much more complex than it perhaps used to be, more time-consuming, more difficult to sell, particularly older vessels, which tend to go to perhaps Eastern buyers who perhaps aren't as well known in the West, and therefore the KYC procedures are harder to do, sources of funds, etc. So we've certainly found that on our side, and I think, as we've said, governance and good processes over all of that is just getting more and more important.
Thank you. We also have in today's topic sustainability. So near-term and long-term net zero targets are looming even closer. What are your priorities when it comes to sustainability, and how are you balancing them against the competing priorities that you have? Any one of you would like to go?
So we've advanced our net zero targets to 2045. We've done a lot in terms of optimizing fuel consumption over recent years. As I mentioned before, the new assets that we're building are dual fuel prepared. We're making sure that we're ready to participate in new energies when the time is right. But I think the most interesting thing for us is that the traditional approaches to reducing fuel consumption that are actually delivering the strongest returns. So we're very focused on doing the right things at the right part of the organization to optimize consumption, which will be the major contributor to our reduction in carbon intensity. And one example of that is the work that we're doing, for example, in our integrated logistics, to minimize the number of vessels that we need to transport the same volumes within the energy fields. Now, it might seem very simple, and it's an obvious economic approach to improving the profitability of the business, but it also dramatically reduces fuel consumption. So I think it's focusing on the simple traditional things while keeping an eye on what's available from new technology.
Gary?
Yeah, I think we investing heavily in sort of energy-saving technologies, and particularly the ones that have short payback. I think they're the ones that are very effective as quickly as possible. I think we as a gas carrier perhaps have a slight advantage, if you like, over some other, in that we already transport ammonia today. We have maybe 10 ships that carry ammonia on time charters. So we're very experienced. We have a lot of capability. We have skilled crew already doing ammonia. We're big into ammonia. We think it's a future fuel for sure as part of the mix. And recently we did a pilot ship-to-ship transfer off the coast of Australia with Yara. That was very successful. We've invested into a ammonia bunkering operation in Norway. And we've also invested into, or have an option to invest into, an ammonia terminal in Brownsville in Texas. We think ammonia is definitely the part of the future, and certainly for us, it's already part of our business today. So I think we can lead in that area. I think it's helpful for us in terms of fuel for our ships, but also we carry ethane. Ethane can be burned as fuel as well. So we have a little bit of an advantage in carrying gas rather than, say, dry bulk or some other. So I think we've got a position where we can really push forward, and certainly the plan to 2050 is tough. Nobody in this room, I think, is sitting there feeling comfortable about that today. I think shipping's got a massive challenge, but certainly doing what we can today with the short-term stuff, planning with the long-term stuff, and making sure the ships that we're building can be as efficient and carbon-free as possible.
Thank you. We'll take some questions now. I'm opening the floor. I can see one.
Hi, this is Max from S&P Global. Can the three shipping companies on the panel talk about their Red Sea transit policies right now? Because obviously everyone's aware that the Houthi has announced a major pullout earlier this month. So I'm quite interested in hearing this.
Maybe I can say,
Sure.
we've had many vessels that has usually been going through the Red Sea area. We have no vessels going through that area now. I think everybody is watching with caution about the developments there. I mean, there are still many ships going through. It's around a third of the usual capacity that has been going through there also during the conflict area. But if you go back to when this conflict started, or when the Houthis started their attacks at the beginning, they also said that they were targeting Israeli, vessels. But they were shooting at any type of vessel in reality. So they weren't as targeted as they said back then. And then of course this all escalated. So eventually we will send our vessels back, but we will watch it and be very careful and be very certain that we're not putting our crews and our vessels at risk before sending them in.
Very much the same for us. So we keep a very close watch on the security situation. We have external intelligence regularly updating us, our whole team. We look on a case-by-case basis at the risk attaching to every single transit that happens in both directions. And at the moment, you see very, very little transit east to west. And we expect that to remain the case for quite some time.
Yeah, we don't have any vessels transiting in a similar way. And to be honest, I probably don't really have an awful lot to add. We're watching the situation. It's not caused us huge amounts of distress in terms of the rerouting, etc. But yeah, of course, it's much better if it's open and it's free and it's safe.
Thank you. Another question was not directed to me, but I'll still answer. So I think probably from our side that we also assess it, and we see that the answers shared over here are completely in sync with whether you ask them here or you ask them in Asia. So I think it is a bit of a wait and watch approach. Nobody is in a rush to say, okay, fine, the routes are open, let's go. I think it'll take some time. If you go to, I think, Clarkson's research, it says that if 25% of normalcy kind of comes back on the passage of the canal, it is the impact is about the demand falls from 3.2 to like 0.7%. And if it goes on full on, then you go from a ton mile basis into the negative territory. So I would say there would be also a strong commercial reason to be, obviously to be safe, but also a commercial reason to continue till the time the things settle as well. I'll take one more question. I know I have only 1.5 minutes.
Question, please. Yes. No.
No, I think there's no other question. So for the last 3 years, I've been doing it, and I asked every panel I have ended like this, and I think it's been very easy to answer the question I ask, and it gets proven by the end of the year because shipping has only been doing well. But I'll still ask if you were to take, and no long answers, please, just a gut feel, and you are not representing your company view here because it's a sectorial question. Where do you think shipping industry will end up 1st of Jan 2026 in terms of profits? Similarish, reduced, or higher? Every time people have said they are more positive and it will be higher, and almost it has been true for the last 2 or 3 years. No pressure here, I'm just asking.
Mm-hmm. Yeah, we look much further ahead. So you should ask what would the market be in 10 years' time. Now, the good thing, shipping is it's the infrastructure backbone of the world. So you need to move cargo. There will be more noise, I think, with the new government in place in the US. They will use sanctions and create a little uncertainty that may have sort of near-term impacts, but it also creates opportunities. So I think the big difference now is that usually in boom years, shipping companies have been doubling up and putting and investing heavily. These last few years, money has been taken off the table and companies have delevered. So I think generally we're in a much better shape for the next year than we've seen, for a long time.
Thank you. Nick.
Last year's been pretty good, and we expect more of the same. So I think relatively flat in a very strong market, and it depends obviously which asset class you're in. It takes a long time to deliver a new asset in most asset classes at the moment, and that bodes well, I think.
Yeah, I'd agree with that. I think it's definitely been a strong year, and I think 25 will be at least the same, I think. Certainly, purely on Navigator's perspective, we think the Trump administration is probably a net positive for us. It might actually even provide more certainty, not less.
Great. Thank you, everyone. Thanks a lot.